This is the 14th TD Ameritrade portfolio update video. We are currently sitting at $4,634.90. This week was a very chaotic and volatile week, so let's go over the positions. So just to start, we're down $136.10 overall, which is down 2.85%. Compared to SPY, which is down $281.57, so we're beating that by quite a lot. Let's go over the positions I closed this week. So to start out, we have, let's see, I want to say we started here. So this week I opened a 0 DTE credit spread, which is very risky, but I ended up making full profit on that, closed that for a $9 gain. I ended up having to close the put leg on one of my iron condors at a loss, and then I let the call leg, I bought that back for pretty much nothing, but I ended up losing on this iron condor because of the put leg getting wiped out. That also happened here, but I ended up closing for almost a profit on that iron condor. And then lastly, I opened up a short-term iron condor, which got blown out because the next day there was a huge rally on SPY for, I believe it was Thursday. So I ended up having the call leg on that broken. But the put leg is basically worthless now. But I ended up losing on that trade because of that. We ended up selling some puts on Soxal and SoFi for the full gain. So a full gain of $8 here and a gain of $2 here on SoFi. And lastly, there are 3 options that all expired this week. These expire on Monday, or I guess, sorry, the put credit spread expires on Monday, and the 2 call credit spreads expire this Friday. So now let's go back over here and let's talk about my current positions. So current positions are a call credit spread on SPY, like I was saying, expires this Friday, another call credit spread on SPY that expires this Friday, and a put credit spread that expires, also this Friday. So I did end up closing out the one that expires on Monday. So these are all Friday expiry options, and I think they're all going to end up expiring worthless. Past that, you can see I've sold quite a lot of puts here, very long dated puts. So I sold 4 puts on SoFi for a 33-day out expiration at the $4 strike price, and I collected a total of, I believe, here, let's take a look at my portfolio here. I collected $8 per contract for 4 contracts, so I collected $32 on $1,600 of collateral on SoFi by selling long-term puts. I also sold the $6 strike Palantir puts. I sold 2 of these, also on the same expiry of April 21st. We ended up collecting $6 per contract, so $12 overall on Palantir. And then Labu, I sold 3 contracts at the $4 strike price for $27 per contract, which is absolutely huge. Like I said, we sold 3 contracts on that, so around an $82 amount of cash put into my account for that. So if we look over here, we currently have $125 in unrealized premiums from these put options. If we go back here, you'll notice that my short options versus my long options basically has me set to be paid $162, and we're currently only down $136. So assuming these all expire worthless, we would be at about a 0.5% of profit on the account by April 21st. So that's quite a ways away. If you actually look into my account currently, if you remember, I've deposited overall $4,771, and if we actually look at my account, the total cash is actually above that. So the cash that's in my account currently is $4,796, which is above the initial deposited amount, which means that technically we are green, but we have to wait for these options to expire. Let's take a look at the charts here. So these are the 2 legs that are remaining on SPY. So as long as SPY doesn't reach the 360 range, which is an absolute low on SPY, so I don't think we're going to hit this at all. If it reaches this, or as long as it doesn't reach this, this will expire worthless. And as long as it doesn't reach the 405 strike or above, then the call side for both of those call spreads will expire completely worthless. And it's got quite a lot of room to run. It would be about a 4% run up for these to get to have the short leg hit, and about an 8% fall for the short put legs to get hit. Now, if we look at the charts for where I sold the puts, you'll see that I got a really good deal. I was able to sell a put that is below the all-time low on SoFi. So if we were to end up getting assigned on, I believe it would be 400 shares of SoFi. If we did end up getting assigned, it would be at a price that has never been reached before. So we would be buying it at the absolute best possible price, which is really good, which is why I ended up selling this put, because I thought if we do end up getting assigned, then we're going to be assigned at the lowest price that SoFi has ever been at, which means we're getting a really good deal. I think SoFi is a good company. They're set to go profitable by the end of the year, I believe, so I'm looking forward to that. So I think this would be my kind of way of looking at this is we either make a ton of profit by it staying neutral or bullish. If it goes really red, and as you can see, it's about a 27% discount that we would be buying it at if we were to get assigned. My philosophy is that if we do end up getting assigned, we're getting assigned at a really, really good price, so I'm okay with getting assigned here. Otherwise, we just make the full profit from the premium, which I'm also okay with. So either way here, I'm fine with how the price moves. Now let's move on to Palantir. Palantir, I also sold a put at the absolute all-time low for the stock. So it obviously had a crazy run up all the way up to $45. And I ended up selling a put at the $6 strike. So unless Palantir falls by about 24% in the next month, then these will expire completely worthless. Once again, same philosophy. Either stays neutral, I make the full premium, it goes bullish, I make the full premium, or it goes extremely bearish, I end up getting assigned, I end up buying 200 shares of Palantir, which I am totally fine with owning because I can turn around and sell covered calls on that, so I'm totally okay with that. And lastly, we have Labu, which I also sold at an all-time low. You can see it's never reached this price before, so if I were to get assigned on Labu, it's the same situation, full premium, or I end up getting signed on 300 shares, and I would end up getting the absolute best possible price on Labu. So I'm okay with getting assigned on any of these three stocks, and I'm also equally okay with the premium expiring completely worthless, because either way we end up either getting a ton of shares at the best possible price, or we end up going green on the account entirely by making the full premium. So I'm totally okay with any of the outcomes here, and that's why I'm kind of moving back towards wheeling. And I know that if you're a long time viewer of the portfolio updates, you'll know that I used to only do wheeling on stocks, and that was quite a long journey. I was doing wheeling for, I want to say, around 6 to 8 months, and I wasn't having any good outcomes when it came to wheeling, and I've kind of taken a different look at wheeling recently. If you do remember, we were wheeling Ford for a while, and I ended up getting assigned on Ford around this price. So I ended up getting assigned on Ford at the $16 strike all the way back in August, right around here. So this is the price we ended up getting assigned on at Ford, and if I drag that down, you can see we would have lost 30% of our money. So the problem I was seeing is that I was selling weekly options every single time. So when I was wheeling stocks, I was selling weekly options, and I wasn't selling at a good deal. I was just selling options for the sake of selling options. But now I'm taking a different look at it. I'm saying, what is an actually good price that I'd be willing to own these? And I'm also selling monthlies as opposed to weeklies. So what this allows me to do is it allows me to actually take a better stance on stocks and say, I want to buy at this price, by this date, and I'm kind of looking at a wheel, or the wheel strategy in general, in that sort of way, instead of saying, can I get my 0.5% this week? Can I get my 1% this month? So instead of just hunting premiums and trying to get a percentage each week, I'm looking at what's a good price to be assigned at, and is this a quality stock I want to own? So I'm taking a much better perspective on stocks in general and wheeling stocks than I was before, because my old strategy for wheeling stocks, it did work, but the problem with it was just I wasn't looking at it the right way. And same thing for Palantir. I used to wheel Palantir, and I think I ended up getting assigned to the 750 strike. So I would have been very green, of course, but the problem with what I was doing is that I was just selling options to get the premium. I wasn't selling it because I wanted to actually own the shares. So I was just looking at it the wrong way. So I'm kind of moving away from spreads. I know we were doing spreads for a while. I think I'm going to continue spreads, but I'm only going to do monthly spreads. I'm going to completely cut out weekly spreads. The reason for that is the gamma Greek that happens is that gamma runs up a ton towards the expiry of the option, and it causes crazy fluctuations, and that's what typically gets me wiped out with the weekly spreads, is that the price will just fluctuate so crazily that I'll end up getting my one of my legs knocked out. So my new strategy going forward is 30DT plus credit spreads on SPY if I do end up selling more spreads, and then the main focus for this portfolio will be wheel and shares. So yeah, that is kind of the new strategy I'm going for here, the new outlook, and we'll see how it goes. So I won't be opening up a ton of plays each week like I normally do. I'll probably just be sitting on my contracts because these are going to be, as you can see, 33 days away. So there's not much to do between now and then. Of course, I'm going to be depositing more cash. I still have cash to sell another cash secured put if I want to. But yeah, so I think we're in a really good spot right now, and we're moving back towards wheeling, which I think is good. And yeah, I'll see you in the next portfolio update.